Welcome to today's video, where we tackle a common issue for high earners: over-contributing to a Roth IRA because your modified adjusted gross income ended up over the limit. We'll walk through how to confirm your eligibility, what to do if you've contributed too much, and the 2 fastest IRS-compliant fixes. We'll also share an expert strategy to avoid this situation in the future. Let's begin. High-income households, particularly those with variable compensation like bonuses and commissions, often contribute to a Roth IRA early in the year. Later, when their actual income becomes clear, they realize their modified adjusted gross income exceeded the eligible limit. That creates an excess contribution subject to a 6% excise tax each year the excess remains. The good news is there are compliant, time-sensitive fixes. We will move step by step so you know exactly what to do and how to do it without panic. In this video, we will cover why overcontributions happen, the first step, which is calculating your true modified adjusted gross income, the 2 primary fixes available and how they work, the critical pro-rata rule that can complicate conversions, the deadlines and IRS forms involved, and finally, a practical year-round strategy to avoid this problem in the future. Before we go deeper, a quick but important disclaimer. This video is educational in nature and does not constitute tax, legal, or investment advice. Tax rules and limits change, and your specific facts matter. Always consult current IRS guidance, such as Publication 590A, and discuss your situation with a qualified tax professional or financial advisor before acting. Your very first move is to calculate your true modified adjusted gross income. Start with your gross income, including wages, bonuses, commissions, interests, and dividends. Subtract adjustments such as pre-tax 401k deferrals, HSA contributions, and other above-the-line deductions. That gives you your AGI. Then, for Roth IRA purposes, certain items are added back to AGI as defined in IRS Publication 590A to arrive at MAGI. Importantly, pre-tax 401k deferrals reduce your W-2 wages and thus your AGI, which can keep you under the Roth income limit. Do not make any changes until you have recalculated your MAGI correctly. You may discover you are still eligible and avoid any fix entirely. To quickly compute MAGI, gather your pay stubs, W-2s, and 1099s, records of benefits elections, brokerage 1099s, and HSA or FSA statements. List your pre-tax payroll deductions, such as 401k, 403b, 457 deferrals, HSA, and similar items. Estimate your AGI by subtracting your adjustments from total income. Then apply the Roth-specific add-backs listed in IRS Publication 590A to arrive at your MAGI. Compare the result to the current year Roth MAGI limits for your filing status. If you are still over the limit, move immediately to the available fix options. This timeline highlights the critical windows. First, the tax year runs January 1st to December 31st. You can make IRA contributions for a tax year from January 1st through the tax filing due date. Recharacterizations and removals of excess contributions for the prior year are generally allowed up to the tax filing due date, including extensions. If you remove an excess, the earnings attributable to that excess are taxable in the year of the original contribution and may be subject to a 10% early distribution penalty if you are under age 59.5. Your custodian will later issue Form 1099-R and Form 5498 to reflect the recharacterization or removal. Acting within these windows helps avoid the 6% excise tax from carrying forward. Once you confirm an excess, you have 2 primary, time-sensitive options. Option 1 is to recharacterize the entire Roth contribution, plus related earnings, into a traditional IRA. Then immediately convert that traditional IRA balance to Roth, commonly called the Backdoor Roth. Option 2 is to request a removal of excess contribution from your custodian, which treats the contribution as if it never occurred and returns the funds plus or minus earnings. Both approaches should be initiated before the tax filing deadline, including extensions, to stop the 6% excise tax from compounding. For a clean backdoor Roth, first recharacterize your ineligible Roth contribution, along with the associated gains, into a traditional IRA. Next, convert the resulting traditional IRA balance to Roth. File IRS Form 8606, to report the non-deductible basis and the conversion. This process works best if, on December 31st of the year of conversion, you hold no other pre-tax IRA balances, such as traditional, rollover, SEP, or simple IRAs, which would otherwise trigger the pro-rata rule. The pro-rata rule is based on your total IRA balances as of December 31st. If you hold any pre-tax IRA funds, your conversion is treated as coming proportionally from both pre-tax and after-tax dollars across all IRAs. That can create unexpected taxable income during a backdoor Roth conversion, even if you contributed after-tax dollars. A common mitigation is to roll pre-tax IRA funds into an active employer plan, such as a 401k if allowed, before December 31st, so that your IRA balance contains only after-tax basis at year-end. Quiz time. Which balances can trigger the pro-rata rule during a Roth conversion? Option A. Only the traditional IRA used for the conversions. Option B. All traditional, SEP, and simple IRA balances in your name on December 31st. Option C. Employer 401k balances only. Option D. Roth IRA balances only. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is all traditional, SEP, and simple IRA balances in your name on December 31st. Employer plan balances, such as 401ks, are not included in the pro-rata calculation, and Roth IRA balances are also excluded. To remove an excess, contact your IRA custodian and request a removal of excess contribution for the relevant tax year. Identify the specific Roth IRA and the contribution amounts and dates. The custodian will compute the net income attributable to the excess and distribute the contribution plus or minus those earnings. The contribution is treated as if it never occurred, while the earnings are taxable in the year of the original contribution and may be subject to a 10% early distribution penalty if you are under age 59.5. Confirm that you receive Form 1099-R and Form 5498 reflecting the transaction. Here is a practical script for calling your custodian and why each line matters. First, explicitly request a removal of excess contribution for the specified tax year to ensure the correct workflow. Second, ask them to calculate and distribute the net income attributable so the earnings are handled correctly. Third, specify that the funds should be returned to your bank account. Fourth, confirm when Forms 1099-R and 5498 will be issued so you can file properly. Finally, if you are considering recharacterization as an alternative, ask for the exact steps so you can compare both paths. Unsure you will qualify for a direct Roth contribution this year? Which approach minimizes the risk of an excess? Option A. Contribute to Roth early and hope your MAGI stays under. Option B. Adopt the backdoor Roth as your standard method. Option C. Skip retirement saving altogether. Option D. Wait 10 years before contributing. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is to adopt the backdoor Roth as your standard method. Alternatively, delaying your contribution until your MAGI is known can also minimize the risk of an excess contribution, but the backdoor approach proactively bypasses the income limitations. Comparing the two approaches. The backdoor Roth keeps your assets in the Roth structure for long-term tax advantages. Here, it requires recharacterizing the ineligible Roth contribution to a traditional IRA and then converting to Roth, and it works best if you have no pre-tax IRA balances to avoid the pro-rata rule. You must file Form 8606, and you may owe tax on any pre-tax portion at conversion. The removal of excess, on the other hand, treats the contribution as if it never happened. The earnings are taxable in the year of contribution and may incur a 10% penalty if you are under age 59.5. This restores liquidity in a taxable account and can be simpler if you want to avoid the pro-rata complications entirely. To eliminate stress, either standardize the backdoor Roth as your default method throughout the year, or delay contributions until your MAGI is certain before the tax filing deadline. The difference of a few months in contribution timing has negligible impact over decades of compounding. Maintain documentation, monitor your year-end IRA balances to avoid the pro-rata rule, and calendar all key deadlines so you never run afoul of the excise tax again. Be prepared for the paperwork. Your custodian will report recharacterizations and removals of excess contributions on Forms 1099-R and 5498. Roth conversions also produce a Form 1099-R. You must file Form 8606 to track non-deductible basis and report the conversion. If a 6% excise tax applies for any year, it is reported on Form 5329. Save all confirmations and statements for accurate record keeping and future reference. To wrap up, confirm your true MAGI first because pre-tax payroll deferrals may preserve eligibility. If an excess exists, act quickly using either the backdoor Roth path or a removal of excess. Manage the pro-rata rule by ensuring you have zero pre-tax IRA balances at year-end, or by using an employer plan to hold pre-tax funds. Track the relevant deadlines. Expect Forms 1099-R and 5498, and file Forms 8606 and 5329 when appropriate. Over the long term, standardize the backdoor Roth method or delay contributions until your MAGI is known to avoid this problem entirely. Here is a quick reference in Markdown format. A simplified sketch of the calculation is that MAGI is approximately AGI plus the Roth-specific addbacks described in IRS Publication 590A. When uncertain, default to the backdoor Roth or delay the contribution until your MAGI is final. The key forms you will encounter include 1099-R, 5498, 8606, and 5329. Thanks for watching. If this helped you avoid the 6% excise tax, please like the video, share it with someone who needs it, and subscribe for more practical, high-earning financial strategies. Tell us in the comments which fix you chose and why, and what other topics you want us to cover next.